everybody, and welcome back. Today with me there is Patrick Ru. Patrick is a portfolio manager of Neuberger, Berman, and Chinese equity specialist. Welcome, Patrick.
Thank you. Thank you for the time.
Patrick, we have seen a strong recovery in Chinese equity market since March and the outbreak of the coronavirus pandemic. So is the crisis already over? What are the drivers for the recovery currently?
Yeah. So in terms of optics, I would say the virus crisis is probably over, and that's defined as it being manageable. In terms of the definition of the crisis being over, where the virus disappears, as your viewers and it's going to take a while. So it's going to be a step and go process. Clearly, China has more freedom of movement, which helps the economy, and that's been a big part of the driver is the resumption of consumption.
So given the global uncertainty in growth and China's own uncertainty, what structural investments and opportunities are still available in China?
Yeah, so there's several things you can think of. One is obviously the localization. So a lot of the supply chain in the world now is effectively going to be split between the West and the East. And that's a function of the trade war that's happening, which is really going to be a Cold War. Regardless of what the governments say, behind the scenes, they are looking to split for national security reasons, for independence. The other thing to look at in China is that they're looking to expand their infrastructure to be what we call new infrastructure, which is basically a way to say a lot of their infrastructure requires some sort of technology involvement, whether it's 5G, whether it's electric vehicle charging stations, or even their subway systems. All of their new infrastructure requires a high level of technology.
So if Chinese consumption does recover, will it look the same like it has been before the coronavirus crisis, or will it be in somehow different?
Right. I want to clarify a little bit what recovery means. A lot of the data we're seeing shows that it is indeed recovering, but in general economics speak, we expect year-over-year generally growth in consumption for a lot of these economies, especially emerging market. I'm not sure we're going to continue to have the same level of growth. So the initial rebound is a recovery. The subsequent quote-unquote recovery may not be as strong as people expect. With that said, the type of recovery I think will obviously change to some degree as our behaviors change, whether it's in China or in the US or in Europe. People's behaviors obviously change, which means that their actions or as a reaction to what they believe will definitely change. And that's no different in any other country. So it will be more oriented to online consumption. It'll be more oriented to maybe quality and trading up. So if you're not going to do something very often, when you do it, you're probably going to want the best experience or the best product.
So how quickly can Chinese economy recover when the rest of the world is still in the middle of crisis, especially the US and Europe?
That's a great question. So the initial recovery is not tethered to the rest of the world, right? Because they were first in, first out. So that's what we're observing now. But the second phase of any recovery does require global participation. And unlike periods or cycles before, China doesn't have the same monetary and fiscal flexibility, let's say. So they are more and more dependent every year on the global growth and global dynamics. So I would argue it will be quite uncertain, which tends to imply in the stock market possibility of a correction.
So does the typical government playbook, the combination of fiscal and monetary stimulus in China, still work?
Yeah, that's the playbook for everybody. And to be honest, let's re-angle that answer. Even if it didn't work, they would still do it, right? Because you have to do something versus nothing. With that said, the impact is probably less and less. We've seen that across all nations, and China is no different, right? Monetary easing has been used for this 10 to 11-year global bull market run. And fiscal the same as well, right? Fiscal is probably used less often, but in this case, both will be needed to try to uplift the Chinese economy. But again, as I reiterated previously, the marginal impact will be less than years prior.
So let's talk about stock valuations in China. What did you observe there during the last couple of months? So how is valuation level of Chinese stocks currently?
Well, again, I compare it to the global environment, but it's also not unique to China, is that the quote-unquote higher quality companies, the valuations continue to get higher. So the spread between momentum versus value continues to widen. What you'll also see is that a lot of the work from home themes continue to do well, regardless of valuation and regardless of even earnings. So a lot of these companies are great stories, but when you go underneath the cover, they don't make money, which I guess for some people is okay, but they probably won't make money for several years, even down the line. Yeah. And so just like everywhere else, valuation does seem stretched from a historical perspective.
So what changes have you made to your China equity portfolios during the last couple of months?
We haven't made a lot of broad changes because the initial expectation was we were creating an all-weather portfolio. With that said, what shocked us is probably, again, my comment previously regarding loss-making companies or companies, frankly, that don't even have good unit economics. So I was a little caught off guard by the amount of liquidity that the world used. And I would argue the excess liquidity is probably a little too early. Usually you should do some liquidity, see where the world is from a fundamental standpoint before you press on the gas to add more. Doesn't seem to be the playbook right now. Seems to be they're just charging ahead. So we haven't made a whole lot of wholesale changes. With that said, the marginal stocks we've been buying relate to what was discussed earlier, more localization and more smart infrastructure, new infrastructure.
This was Patrick Rue from Neuberger Berman. Thank you very much, Patrick, for being here with us today and sharing your insights.
Thank you, Thomas, for your time. Best of luck.